Hello, hello everyone. Welcome, welcome. Welcome everyone. We'll get started shortly. Hey Corey, welcome Corey. Guys, we'll get started shortly here. This is our beginners class. So beginners class for beginning traders. We'll get started shortly. Thanks for being here. We'll get started shortly. Hello, Thomas. Welcome, Thomas. Welcome. Guys, we'll get started shortly. Again, this is our beginners class for beginning traders. We'll get started shortly. We'll get started shortly. We'll get started shortly. Again, this is our beginners class for beginning traders. We'll get started shortly. We'll get started shortly. Hey, Kawisi, welcome, Kawisi, welcome. Guys, we'll get started shortly. Again, this is our beginners class for beginning traders. Whether you've got a few weeks, few months, or even a few years and you're still trying to figure things out. All right, welcome. Hey, Gerald. Welcome, Gerald. Welcome. Guys, we'll get started shortly here. Let me give you guys some good tips, tricks, and some secrets this evening. Tips, tricks, and secrets. We'll get started shortly. All right, everyone, let's go ahead and get started. Let's do this. I am going to share my screen and welcome for the new traders that are here this evening. Thanks for coming. We do these classes, training classes every evening. We do Sunday through Thursday, 7 p.m. Eastern time. And then every other Friday, we do a variety of different training. This training is our beginners for our beginning traders. So you guys should see my screen. All right. I want to keep this very informal. All right. There are certain tools that I will give you guys this evening, but I call this is your time, right? So we shouldn't have any of our experienced traders on this training. So I call this your safe space, okay? Where you guys can really get the information you need so that you can get into trading the right way, okay? But interrupt me at any time. I will ask questions, so don't be shy, all right? Let's get to it. I've been doing this for about 25 years. I've been trading for quite some time, all right? And I started my company, Monster Trading Systems, about 2010, so some time back. All right, and we do coaching, training, and we also provide training tools, trading systems with built-in algorithms for our traders. All right, so I've been around for a while. All right, but I'm always learning, always picking up new skills to help our traders. One thing I'm gonna tell you guys when it comes to trading, it's not what you think it is, right? It's not as difficult as everyone make it out to be. There are some processes, some things that we have to follow. But if you follow the process, you can do well. Not that you'll become millionaires, right? It's not about making millions. It's about learning a skill that perhaps can bring in some revenue for you. Okay, so this is not a get rich quick. I know a lot of folks think this is trading is, hey, we're gonna get in and get rich right away. That's not the game. That's not how the game works. Okay, but thanks for coming this evening. So let's get to it. All right. So this is a book here. You guys should see it on my screen. It's called Trading in the Zone. For new traders, I highly recommend this book. All right. We actually give this book to our traders that come in and go through our one-on-one coaching program. We give them this book free of charge. It's called Trading in the Zone. All right, Trading in the Zone. Master the market with confidence, discipline, and a winning attitude. All right, by Mark Douglas. So Trading in the Zone, it's all about your mindset and really understanding how the markets work. All right, so Trading in the Zone. All right, so take a picture of it. Trading in the Zone by Mark Douglas. All right, so we offer this book free of charge to our traders. You can also go on YouTube. So after the class, you can go on YouTube and there's a free audio book. Just put in Trading in the Zone, it will come up and you can start listening to it and start getting this information, getting this knowledge. All right, so we want to build you up, all right, make you a very good trader, but it really starts with your mind. Okay, so it really starts with your mindset, how you look at trading, how you look at wins and losses. All right, so we do a lot of work with this book, Trading in the Zone. All right, has anyone heard of this book, Trading in the Zone? Anyone? Have you guys heard of this book, Trading in the Zone? Anyone? Yes or no?
I heard about it from you, Dave.
Okay, all right. All right, can we see you too? Okay, awesome. Okay, all right, so let's get to it. Let's see here. All right. What's the first thing? Let's talk about this, especially for new traders that have been here, coming here for the first time. If you're looking to trade, what are some of the concerns you guys have when it comes to trading? What are some of the things you want to find out about, you want to learn about, you want to know when it comes to trading? What are some of the things you guys want to find out about? Anything? So when you go to put on a trade, what are some, how much capital? Okay, so Corey, how much capital to start with? Okay, all right, that's a good one. Anyone else? Anyone else? Okay, how, okay, diversification, okay, all right. So what to trade, what to pick, okay. Anything else? Okay, so what to trade, what to pick, trading amount, trading size. Okay, we'll get to that. All right, time frames. Can we see time frames? That's a good one also. Time frame. All right. How about when to get in and when to get out? All right. All right. Pip counts. Pip counts. Okay, pip counts. All right. Let's talk about, I think the most important thing for new traders is everything else, right? We can get to it, right? But for new traders in particular, right, our entries and our exits, right? That's going to be the most critical aspect of your trading, all right? When do we get in and when do we get out? Okay, that's perhaps the when I do coaching with our traders, we do the training, that's always a concern, right? Even with experienced traders, there's always a concern with timing their entries, all right, and timing the exits, okay? Keep in mind when we trade, we want to remove or try to remove as much emotions as possible. You know, we are individuals, right? We know that emotions will be there, especially when we trade our personal money, our capital, right? It becomes very emotional. All right. So the goal is to have a process when we trade, first understanding how we make money trading, all right? And then having a process in place that's systematic, okay? That's somewhat rule-based, that we can do that consistently over and over, right? So we follow a process that's over and over. All right, so the main thing we want to look at when we trade is the process, and then how to get in our trades, and then how do we get out of our trades. So I'm going to share my screen here with you guys, and you should see my screen. All right. right here, and it should say support and resistance. Support and resistance, the keys to your success. So those of you who do not have this, I highly recommend take a picture of it or a screenshot, save it. All right, print it and have it laminated. I tell that to our traders. I do the same thing. I have mine here, right? Okay, so you want that available at your trading desk all the time. All right, so support and resistance, and we'll go through it. Support and resistance, the keys to your success. All right, support and resistance, the keys to your success. Why do you guys think this is so important? Why does it say here, support and resistance, the keys to your success? Anyone? Anyone? Support and resistance, the keys to your success. All right. Well, let's go through it. Okay. So
I think if you follow the support and resistance formula, then that in itself is going to make you a successful trader. Just understanding the resistance and the support formula is this chart. If you understand that, then that alone is going to allow you to be successful.
okay, good, Jared, but why? Why?
Because trades are going to be made when this support and resistance are met. So we're going to either enter trades at the break of resistance, and then we can either get out of trades at the break of support. So following this key chart is going to allow you to know when to get in and when to get out.
Very good. Very good. Good job. Very good.
Just
Okay.
to add to that, support and resistance is where you do constant testing to to test your ideas, to see what your theory is on where it's going to go next.
Absolutely. Good job. Good job, guys. Good job. Good job. Good job. Now, support and resistance, this is going to be important. Okay. This is something we cannot get away from. This is your foundation. All right. So this is something you guys will have to know and you will have to follow. It is that important. It is your first step, your foundation in trading. There are a lot of tools out here, right? This support and resistance has been around a long time, and it's not going anywhere. This is all the big banks use, all the hedge funds, all the really good traders, they use support and resistance. Now, they might add additional tools to it, all right, in addition to support and resistance, but everything starts with support and resistance. So you guys need to know it, you need to follow it, all right? And this is the way it works, okay? So think of resistance here, okay? Think of resistance here as your ceiling. So where you are at home, right? Resistance, your ceiling right here, and support is your floor. So your floor at home, right? That's your floor. And what's happening is this, there are buyers right here. So right here at resistance, there are buyers. And right here, there are sellers. So there are buyers here, and then there are sellers here at resistance. There are also buyers here, and there are sellers here at support. And what the buyers are looking to do is they're looking to push the price higher, okay, higher above resistance, and the sellers are looking to push the price lower. So there's a battle right here between buyers and sellers. Same thing here. There's a battle here between buyers and sellers. All right. And what the buyers are looking to do, like I said, break resistance, okay, and move the price higher. Support, the shorts, we call them the shorts, are looking to push the price lower. Okay, so buyers are looking to push the price higher, right? Sellers are looking to push the price lower. Break support, right? Sellers are in control. If the price breaks support, if the price breaks resistance, the buyers are in control. Understand this. All right, trading is not gambling, right? Price doesn't move in random, right? Traders are controlling the price, all right? And there are specific support levels and resistance levels that they follow, all right? So there are particular levels here. So here at resistance could be $100. And then here at support, it could be $50. And traders, they memorize these numbers. So every time the buyers come in and push the price up to the $100 mark, guess what? Sellers will come in and push the price back down to support at the $50 mark. And same thing here, okay? And same thing here. All right, we call this area here, this area in here is not tradable. All right, it is not tradable. That's consolidation, accumulation, or distribution. We only trade, we only buy, get into the trade when the price breaks resistance. This line right here, resistance. Notice, right? And Corey, you mentioned this. We always testing. All right. So here, price hit resistance, hit resistance, hit resistance. Price came back down, hit support, $50 mark, support, 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 support here. Okay. So write this down, everyone. We want to buy on a break of resistance, sell on a break of support. We always, 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 always buy, enter the trade when the price breaks resistance, and we sell, we get out when the price breaks support. All right, so write that down. We buy on a break of resistance when the price breaks resistance right here. So that $100 mark, we would buy, all right, to move higher. If it breaks support, whenever the price breaks support, if it's sometime in the future, if it's right away, it doesn't matter. Whenever the price comes down, breaks support, we have to get out. And we have to get out of that trade because now who is in control of price? The buyers or the sellers?
Sellers.
The sellers. So remember this, when the sellers come into the market, we will know that they're in the market because the price broke support. So we have to get out of the trade. If the price breaks resistance, who is in control?
That would be the buyers.
The buyers. Very good. So we do what? When the buyers are in control, we do what?
We also buy.
We also buy. Very good. So understand, as retail traders, which is who we are retail traders. We're not big institutions or hedge funds, right? So we can't move the price. We do not have enough capital, right, to move the markets, to move the price. So all we do is we piggyback on what they're buying and selling. We will know when they're buying, when the price breaks resistance. Here, there's indecision in price. So no one is in control here. All right, so between support and resistance, no one is in control. The buyers are not in control and the sellers are not in control. So we'll know when they're in control, right? And they start buying when the price breaks resistance. That's why support and resistance is critical. So we're gonna buy on a break of resistance, and take this to memory. Everyone, buy on a break of resistance, sell on a break of support. And we'll look at some examples this evening. All right. So we're gonna buy on a break of resistance, sell on a break of support every single time. All right, every single time. All right. So I hope you guys made a copy of this. Like I said, print it, laminate it. All right. So support and resistance, the keys to your success. All right. So we'll start with this. And now we're going to move further. Right. So this is your entry and your exit. Right. And now we're going to go through your roadmap. Right. So from here.
You still got the other screen up.
Yeah, support and resistance, right? You see that?
Yes, sir. Yeah.
Okay. All right. So, all right, take a picture of this. All right. So from here, this is important. All right. So when you guys go to trade, don't randomly get into trades. All right. Don't get any opinions from anyone as far as when to get in and when to get out. Right? Go to your chart, find resistance, find support, wait for the buyers to get in, break resistance on any time frame. Someone had mentioned time frames, right? So we can do this on any time frame, whether it's a 30, 60, right? 240, daily, weekly, monthly, doesn't matter. We can find support and resistance on every time frame. And the way it works is like this. The way we find support and resistance is like this. We need a minimum, guys, of 2 touches. All right, a minimum, meaning that the price needs to get to that $100 level. All right, get to that $100 level at least twice. So here's the $100 level right here, right here. At resistance, it needs to get to that area minimum of twice to create resistance. Once is just a high, right? So here's the first time. Here's the second touch. Now we've got resistance. The third time, we've got stronger resistance. And then the fourth time, we've got even stronger resistance, okay? The more touches, the stronger the resistance. Same thing for support. Here, here, that's that $50 mark right here, right? Here, here, and here. So here is our support. All right, here is our resistance, but we need a minimum of 2 touches to create that resistance or that support. All right, so that's how support and resistance is created. One time is just a high. All right, we need the price to retrace, pull back, get back to that same level to now create resistance. All right, so let's move on. All right, so we know about support and resistance. All right, so let's move further along. The next thing we need is once the price breaks out, the buyers get in. All right, breaks resistance, the buyers are now in. We now need to manage the trade. All right, we now need to manage the trade. And we do that through the 4 market phases. All right, so let me bring it up. All right. So the 4 market phases that every trader must know. please take a picture of this or print screen. Print it, laminate it. This is important, guys. This is your roadmap. Okay, you guys should see my cursor here. The 4 market phases that every trader must know. So take a picture of this. We'll go through it. Yeah, absolutely. Without support and resistance, you really cannot trade, right? Price is just random. And what we're doing with support and resistance, guys, is this here. What we're doing is we're blocking up the price. All right, so we are blocking up the price. So now we can control the price, right? That's all we're doing, right? With support and resistance. We've got to block it off, okay? Figure out where the buyers are and where the sellers are in order to trade. So without that, we can't do anything. All right, so let's get to it. The 4 market phases that every trader must know. Every trader must know. All right. The first is accumulation at the bottom here, and we'll go through each of these. So 1 is accumulation, 2 is the markup phase. So accumulation phase, markup phase. 3, distribution phase. Number 4 is the markdown phase. So accumulation, markup, distribution, and then the markdown phase. Within the markup phase, we've got reaccumulation. I'll go through each of these. And then within the markdown phase, we've got distribution. Okay, so let me repeat. The 4 market phases that every trader must know. This is critical. Accumulation 1, markup 2, distribution 3, markdown 4. Hey, Chris, welcome. Okay, and again, within the markup phase, you've got reaccumulation. Within the markdown phase, you've got redistribution. And as new traders, if you guys get this, if you get support and resistance and you get this, guess what? You'll be farther along than 99% of the traders out there. Okay, you won't be guessing, you'll be trading. And as traders, we are different, right? And the reason why we are different, because we have a very specific, very defined entry and exit. We're not randomly getting into the markets and trading. We have a very specific entry and exit. We're not buying and hold. We don't buy and hold or buy and hope. All right, we have a very defined entry and we have a very defined exit. So we enter on a break of resistance, exit on a break of support. Okay, so accumulation, markup, distribution, and markdown phase. All right, stop me if you guys have any questions. All right, as I go through this. Okay, so here is your resistance. We're gonna always start at the bottom left, middle, or right of your chart, right? And what we want is this. We want price to come down, okay? Kind of like this in that markdown phase. We want it to come down, right? Fall. We don't want to buy up here. We want the price to come all the way down, all right? Accumulate like here, then break resistance. This is your resistance here. And then this is your support here, right? So we want the price to come down, right? Consolidate or accumulate. And then we want the price to break resistance right here, break resistance, and then we're going to get in. We are not buying down here. We are not buying here. We are not buying here. We are waiting, guys. We are waiting until the price breaks resistance. All right. Because we know now the buyers are in control. We'll buy here. All right. And that's our entry. If for whatever reason the sellers come back in, all right, comes back in, break support, we'll get out. All right, we'll take that loss and we'll get out.
Hey, David, can you back up to the part where you mentioned 2 touches on the resistance? What's that for again?
Okay. All right, so we need a minimum of 2 touches to create resistance. Okay, so if we just have one, look here, this, if we just have one, a high, that's not resistance. Okay, we need the price to get to that area, pull back, and then get back to that area and stop. And now we have resistance or support. So a minimum, Corey, of twice, minimum of twice to create resistance or support.
Got it. Thanks.
Got it? Okay, awesome. Okay. All right, good question. This needs to be clear. Okay, so let's walk through the trade now. Let's walk through it. Here is resistance. Here is support. The price broke resistance. So we know now the buyers are in control. The buyers are in control because the price broke resistance. It didn't break support. It broke resistance. So the buyers are in control. So we're going to buy right here when the price breaks resistance. Okay. Once the price breaks resistance, we are out of phase 1. We are out of that accumulation phase. We are now in the markup phase. So we're starting to move higher. We're in that markup phase. Okay, we're in the markup phase. Price is moving higher. We make money. We make money in the markup phase. Write this down. We make money in the markup phase. We do not make any money in the accumulation phase or the consolidation phase. We make money when price trend, and it's going to trend in the markup phase. So we are constantly testing resistance until the price breaks resistance. All right, we are waiting patiently, right? We don't trade because we want to trade. We trade only when the price breaks resistance. So we're gonna get in here, that's the markup phase. Within the markup phase, understand that price doesn't move up in a straight line like this, right? It's going to take a break, traders will rest, right? And that is called, anytime it rests, accumulation or consolidation, all right? Or distribution, all right? So it's resting here. If the price is going to create new support and resistance when the price rests like this. When it breaks resistance again, which it did in this case here, right? That's called reaccumulation. So support and resistance will be created as the price moves in the future. Okay. So it just doesn't happen down here. It will move throughout your chart. So it's critical that you draw your support and resistance. Any questions on this so far? Okay. All right, so let's move along. All right, so price broke resistance. We bought here. we know we're in the markup phase, price is moving higher. We understand that price isn't going to go up in a straight line. It's going to stop, take a break, especially between markets. All right. If the price holds support like it did here, breaks resistance, that's reaccumulation. And we can actually add to our position again here. We can add to that, to our position, because we're reaccumulating. We add in, we have new buyers are entering the market. So we had our first set of buyers entered here. We have another set of buyers entered here. Okay, giving us another chance to enter into the trade again, add into our position. At some point, understand, at some point, the price will stop. And I know as traders, we want the price to go up forever. All right, it doesn't do that. At some point, price will come to a halt. It will stop and start to consolidate again. We call that phase 3, the distribution phase. If you guys get this, right, your trading will, I can tell you this, right? If you guys get this process, right, there's no more guessing, right? Your confidence will really skyrocket, all right? And your trading results will skyrocket, okay? So understand that the price will not go up forever. At some point, all right? It's going to meet resistance at the top, and then it's going to create support here at the bottom. That's the distribution phase. All right, that's the distribution phase. When the price breaks support, remember this, right? Remember, right? We sell on a break of resistance, right? We buy on a break of resistance, and we sell on a break of support, wherever that happens. So here in the distribution phase, price broke resistance. I'm sorry, price broke support right here. So we have sellers are now in control. Sellers are now in control. So we've got to get out of the trade. So we bought here and we got out here on a break of this support. Price never broke support here, okay? It never came back and broke support here. Previous resistance becomes support, all right? It didn't break support until right here, and that's our exit. So we bought here, sold here. And now sellers are in control, guys. Sellers are in control. So now it's in that markdown phase. So we should be out of the trade. Same thing here and same thing here. So we've got reaccumulation here. We've got redistribution on the other side. So again, price doesn't go down forever. It's going to stop, right? Consolidate again. If it breaks support, we've got new sellers coming in to push the price even lower through that markdown phase. All right. If it's new to you guys, just process the information. Just process the information, okay? You'll get this. You'll get it. Phase 1, accumulation. Phase 2, the markup phase. Phase 3, distribution. Phase 4, the markdown phase. Within the markup phase, we'll get additional opportunities to add to our position. That's reaccumulation because new buyers are entering the market right here. Within the markdown phase, right, we have new sellers entering the market to push the price even lower on a break of support. 4 market phases that every trader must know. All right, any questions on this? You guys have to, you have to notice, you have to get this. All right. All right. Let's move further. All right. We created this chart here because traders were trying to short, right, make money going down deep into the markdown phase. So we came up with this so that you're not trying to short through the markdown phase. You can anticipate, right, the accumulation phase. So understand, this is what we're doing. We want to buy here, break of resistance, sell here, break of support. And we want to take those profits and get out. Where most traders are buying up in this area, in here, buying up in this area, in here, guess what? We bought down here, right? We didn't buy down here because the sellers are still in control, or no one is in control. All right, so we want to buy here on a break of resistance, sell here on a break of support. We want the price to come down through that markdown phase to the bottom of our chart to give us that reaccumulation all over again, just like we did here. Okay, so we bought here, got out here. Now we are waiting. If we're not shorting, we're waiting here for price to accumulate again. Start that process all over again. All right, breaks resistance, and we get in again to do it all over again. All right. Now, why don't we buy here and exit here? Anyone? Why don't we buy at support and sell at resistance?
Because we want to
It
buy
has to,
on the trend of the movements.
Okay. All right. Anyone else?
well, you don't buy during accumulation because it hasn't been tested. Well, at least you don't buy at the start of it.
Okay. Okay, but my question is this. Okay. Why don't we buy at support? Why don't we buy? Because this is what traders do. All right. They want to buy, because I get this a lot, Dave, you know, especially when and I did it, right? When I first started trading, right? I always wanted to get the very bottom. Because guess what? If we bought here and we didn't, this was $50 here, and it's $100 here. And I know you guys are going to say the same thing, Dave. I want to buy it. I don't want to buy it at $100. I want to buy it at $50. I'm going to get a better price, right? And I don't want to sell it. I want to sell it at $100 here, all right? But let's say $200. But let's say I want to sell it at $300. Let's do this here. I want to sell it at $300 up here, all right? I don't want to sell it, get out at $200 here, right? So look here. I get this all the time. I don't get it as much anymore because our traders understand this, right? But before I got this a lot, right, Dave? Why are you asking me to get in at $50? Right? I mean, why are you telling me I need to get in at $50 when I could have gotten in at the bottom here, right? At $50 rather than $100 here. You're asking me to get in at $100 here. And why are you telling me to get out here at $200 when I could have gotten out here at $300 and made more money? So I could have made a lot more money had I gotten in at 50 and gotten out at 300 rather than get in at 100 and get out at 200. So why am I saying we should get in here and get out here? well, your profit will be less, right? But so why am I asking you guys, when you trade, to do this and not this?
Well, you want to get it's what they call it, the meat of the trade.
Oh, Gerald.
The trend following meat of the trade.
Good man. You've been paying attention. Very good job. Very good job. All right. So we want the meat of the trade. So here's the next chart. And you mentioned it, Gerald. Good job. Trend following. All right. So let me share it. This. So this will be the last chart, and then I'll show you guys some live examples and get you out of here. All right. Okay. So you guys should see my screen, trend following, as Gerald mentioned, right? We want to get the meat of the trade. All right. We can't be greedy when it comes to trading. We want to execute properly. That's our goal. Systematic, every time, all the time. It's not what we want, right? So this is what we want. Trend following, the meat. We want to get the meat of the trade. I call that the sweet part of the trade, not the whole trade, just the meat of the trade. All right. So let's talk about this. You guys, as traders, as new traders, you will do this. You're going to try, the price is going lower, right? Down into that markdown phase. And you guys will want to get in right here. You're going to want to get in at that $50 mark. Price is moving higher. You're going to want to get out right here at that $300 mark. Right here. Understand, this is not tradable. If you try to get in at the bottom here, all right, you're dealing with selling, that's selling territory, right? It's still in that markdown phase. The price could go much lower than $50. All right, so if you try to buy here, guess what? The buyers are not in control. Sellers are still in control. Very important. So we've got to wait till we get support. The price stops, right? Consolidates, all right? Breaks resistance right here to now enter the trade. So that's why we can't buy at $50. We're going to have to buy at $100 because we need the price to come back up, hit resistance, breaks that resistance to give us our buy signal, because we know now buyers are in control. During here, no one is in control. Below support, the sellers are in control. We only know, and we're only going to get in when the buyers are in control, and we'll know that when the price breaks resistance. Okay, same thing here. We cannot get out at that 300 mark at resistance near the high, because guess what? The buyers are still in control. The buyers were in control here. Buyers are in control here. Buyers are in control here, right? So this could have been a high. So we could have gotten out here. We could have gotten out here. We could have gotten out here, right? Because this is a high. This is a high. This is a high, right? Understand, we'll never get our maximum profit if we try to get out at the high, because we just don't know where that high is. We will know when that trade is over, all right? When that trade is over, when the price does what? When the price does what, anyone? When the price does what? We'll know the trade is over when the price does what?
Great support.
break support. Very good. So here is where it broke support, right? We know that the buyers are no longer in control. The sellers are in control, and we will exit here. So we will sell here. So our goal always is to buy on a break of resistance, sell on a break of support. Buy on a break of resistance, enter on a break of resistance, sell on a break of support. All right. And that's the meat of the trade. All right. All right. Any questions on this? You guys think you can do this? You think you can do this?
Absolutely.
Absolutely, right? It's all about knowledge, right? Once you understand this, you do it a few times, right? You understand the process, how trading works, how we make money, then absolutely you can do this. All right. So let's take a look at, I hope you guys took some pictures of the charts here. All right. Let's take a look at a few live examples here. Okay, so I'm going to share my screen, and we'll go through some examples, and I'll get you guys out of here. All right. Okay, so right now we are trading Forex. So we are trading the Forex market. All right. And we are doing that on a 240-minute time frame. Okay. So forget about really what we are trading. Let's just look at the process on the chart live. All right. So this is a live chart here. Okay. All right. So here is the markdown phase, guys. Right here, you should see my chart. You should see my cursor. This is the markdown phase. So we are waiting, okay, to get in. We did not get in until a break of resistance right here, right? This blue arrow right here, I know it's hard to see, is our buy signal, okay, to get in. All right, so here is the markdown phase. Here is the accumulation phase, phase one. All right, phase two is the markup phase. Here was our buy signal here to get in. Red candles are the sellers, green candles are the buyers, white candles, that's neutral. That's going to come in near the accumulation consolidation phase. Okay, so what phase is this? Anyone? What phase is this?
Distribution and redistribution or markdown.
Markdown. Very good. What phase is this? Very good, Corey. What phase is this? Right here.
Consolidation.
Consolidation or accumulation. Okay. And then what phase is this?
Markup.
Very good. Markup. Who is in control of price right now?
The buyers.
The buyers. Very good. So we buy and we stay in the trade. What phase is this right here? What phase is this?
Reaccumulation.
Very good. Very good, Corey. Reaccumulation. So accumulation, markup, reaccumulation. Do we have any distribution? Do we have distribution yet?
Not yet.
Not yet. So what do?
We wait for it to break another support or resistance.
Very good. Okay, very good. Okay, so that's one. Let's go through. Let's take a look at a few more.
I have a question before we move on. Just a quick question.
Okay.
I'm not sure if this is a popular time frame, but I'm seeing the 240 a lot in your lectures. Like, is there a reason that we trade on the 240-minute and not the 30-minute or
Okay.
any other one?
Okay, well, that's a good question, right? So the time frames work like this, guys. Okay, so when we trade, it's not about what we want. Okay, it's really what the market is giving us. Okay, and I know a lot of traders like to trade on a particular time frame. Okay, so we want to think differently. We're going to think of your time frames as arrows. All right. So you go and hunting, and that's what we do when we trade, right? We go hunting. All right. And so think of the time frame as different tools that you've got, right? When you go hunting, right? So think of the time frame like this, right? A 30-minute time frame. You want to capture, you're going to capture a smaller move. The smaller the time frame, the smaller the move. The wider the time frame, the wider the move. So if we're looking to capture a small move, and normally to bring out a 30-minute or 15-minute time frame, we're not trading the markup phase. The markup phase, understand when the markup phase happens, okay, we've got new buyers coming in. We're looking for a trend. So we're looking for new buyers to come in and move price. So we need to open up our trading window. Okay, we need to open up our trading window. Here's a 30-minute and here's a 240. Okay, we need to open up our trading window to capture the big move. Okay, a 30-minute time frame, and this is a pretty good move on a 30-minute. Okay, but a 30-minute time frame will stay in a trade usually within a day. So intraday, Corey. All right, if we are lucky, we might get 2 days out of that trade. All right, and then sellers will come in, break support, and then we'll have to get out of that trade. Whereas the 240-minute, which is 4 hours compared to 30-minute, we could stay in this trade for a month and capture all of that move rather than getting in and getting out. Okay, usually when you trade a 30-minute time frame to be very effective, all right, now can we trade a 30-minute? And I don't want to get too much into this, right, because this is the beginner's class. But normally, if you want to trade a smaller time frame, you're looking to trade the accumulation phase. Okay, you're looking to go from support to resistance, back from resistance to support. So in order to do that, you've got to reduce your time frame. That's not what we do.
Understood.
Okay? Yeah, what we do is we want to catch that big trend. We want to make, because we need those big trends, right, to pay for our little losses. All right, but that's a good question. That's a good question. However, we can put on the 30-minute time frame, and we can so as an example here is the 240, and we could trade the trend on the 30-minute time frame and capture this move. But ideally, we want to be on the 240 to capture the big move. All right, if the markets consolidate tightly, then we can bring that time frame down. Okay, all right, good question. Okay,
Thanks.
okay, so here is a chart here, and we'll end with this. We're going a bit over here. Okay, so let's draw it out. We'll end with this. Okay, so what phase is this right here? What phase is this?
Reaccumulation phase.
Reaccumulation, right? Price broke resistance. We got a buy signal here. What phase is this now?
That's the markup phase.
The markup phase, very good. Price made a high. This is real time, guys. This is real time, okay? So we're taking that information we got from the charts I gave you guys, support and resistance, the markup phase, trend following, the 4 market phases, all of that. And we're taking it now in real time. Okay, so price made a high, all right? Consolidates, what phase is this now?
Distribution.
Distribution, and it's distribution because the price broke support, we got a sell signal to get out. This white arrow here is our sell signal to get out. So we bought here, sold here. Notice we didn't get at the bottom and we didn't get out at the top here. We got the meat of the trade. We bought here, sold here, got out. All right. And we got out here because the price broke what? Support, right? What phase is this? Look at the sellers coming in, guys. The sellers are coming in like crazy, right? But we are no longer in the trade. We're out. We let someone else. Listen, trading is a zero-sum game. No one cares, right? Our job is to get out when the sellers come in. We'll let someone else, let another trader who got in here take these losses. That's not our job. Our job is to get in here, get out here. When the selling comes in, we're going to be out of the trade. Waiting patiently for our next opportunity. And when will that come in? That will come in right here after accumulation, right? We'll know that the buyers, look here, we got another buy signal. Perfect here on this break of this resistance right here. Guess what? We never got a buy signal in this area here. Our last buy signal was right here. So we bought here, got out here, made profits, got out, the sellers came in, we got out. This is the markdown phase. Here is accumulation. Price broke resistance right here. We got a buy signal right here to get in. This is the markup phase. We do it all over again. And now we will wait at some point in the future when the sellers come in. They're not in yet. We'll know when they come in, right? And we'll know when they come in at some point in the future when the price breaks support, right? Distribution, and then we will close the trade. All right. So that's how we trade, guys. Those of you who are here for the first time seeing this, right? You're fortunate to get this information early. All right. Before you start trading. Okay, I wish I had this information years ago when I started. All right, but this is the path: support and resistance, the 4 market phases, and then we want the meat of the trade. All right, any questions on this? Any questions on this? Okay, all right. We'll end here. Remember, trading in the zone. Okay. Trading in the zone. You guys can go on YouTube. All right. You can go on YouTube after this training class. Start listening to it. If you're serious about getting into trading, start listening to that audio book, Trading in the Zone. It will help you guys out quite a bit. Okay. I hope this information was informative. We have classes every evening, guys, Sundays through Thursdays and every other Friday. All right, so come to them. All right, this is our beginners class. Some of the other classes are more advanced, but you can sit back and listen to our traders, how they view the markets and trade the markets. Okay, any questions for me? Any questions? No? All right. All right, guys, have a good evening, and I will see you guys tomorrow. Take care. Bye-bye.